Hello and welcome to this week's US Stock Market Report. I'm Gillham, Chief Analyst here at Wealth Within. Now this week I'm going to be discussing how to profit more consistently when using swing trading strategies, the Dow Jones Index and this week's stocks of interest. Now if you're a regular to this channel, welcome back, and if you're joining us for the first time, let me extend a big welcome, as you will no doubt gain some great insights and inspiration as to how you can confidently and profitably trade the stock market. And as always, if you have any thoughts on this week's report, or you just have a question to ask, please comment below and be sure to subscribe to our channel so you keep up to date. Also, click the like button just below right now. So let's get into this week's report. When trading the stock market, the most important priority for traders is entering or exiting a trade at the earliest possible time and at the lowest possible risk. This means buying a stock when it indicates with the highest probability that it will move up in a continued uptrend, or selling when it indicates it will fall away in a continued downtrend. Now, while this is great in theory, how do you put this into practice? Now that's where incorporating swing trading strategies into your trading will give you the greatest advantage. Let me ask you, do you find you continually get stopped out of trades, or you have a series of low profitable trades followed by a big loss? You may even get a series of small losses and an occasional good profit. If that is you, then let me say you're placing trades that have a lower probability of success. But don't worry, you're not alone. The majority of traders who come to me to fix their trading are exactly the same. You don't know what is wrong with your trading until you get a great mentor who finds all those little issues that are stopping you from making real money. Now I find that many traders continually chase profits with little, or in some cases no, regard for what they can lose, and as a result they take higher risk than necessary to achieve their goals. Now the end result is that over the long term their portfolio either underperforms or they lose. Now that can all be fixed. So how do you increase your probability of success? Well, firstly, you need to understand that good trading is not about getting in at the absolute lowest price and out at the absolute highest price. Attempting to do this is not only hard to do, but it increases your risk and reduces your returns. Now, there are many things you can do to increase profit and reduce your losses. The first is to increase your knowledge, as poor performance is a sign of a lack of knowledge. You can also set better, more consistent money management rules. You can also work on your trading psychology, as many traders underestimate the importance of this area. You could also use a trading plan, as I know with high probability that if you are not consistently profitable or are struggling in your trading, that you are not using one now. And the list of things you can do just goes on. Now, while these areas may seem like common sense, I must admit that I've met literally thousands of people who tell me that they are traders but have little or no concept of these areas, particularly when it comes to a written trading plan. Now, why is this? Well, they live under the illusion that they do understand them. Yet I cannot fathom how anyone could think they will be a successful trader without having a written trading plan. That's like trekking through the wilderness without a compass, food or water. Crazy, right? Well, to help you in this market report, I will introduce you to a simple technique that you can include in your trading plan. Now, it takes very little time and it will significantly increase your probability of success. Now, when I mean significantly, I mean tens of thousands of dollars in extra profits and significantly fewer losses. So what is this simple technique? Well, it's one of my favorite trading tools, the Gann swing chart. You know that 90% of traders are not consistently profitable, and these traders do not know what Gann swing charts are, and so you know these are a key to profitability. For those of you who are not familiar with Gann swing charts, they are a price-based chart constructed from the price relationship between bars on a bar chart. The basic theory is that the swing chart swings up in price if the current bar has a higher high than the previous bar, or swings down in price if the current bar has a lower low than the previous bar. Now, an important point to note is that in general, swing charts have no relevance to time. Instead, they provide a very visual representation of the direction and strength of the market. At any one point in time, depending on what the price of the stock is doing, the swing chart will either be pointing up or down. When trading for profit, it is important for a trader to know the direction of a stock over the short, medium and long term every time they trade, and here is the key to why most struggle and fail. The time frame you are trading will determine how you view a swing chart and how you apply your swing trading strategies. And here is the key to your success, in that you not only need to learn about these charts properly, but learn how to apply the analysis to them correctly. Now let's look at an example. Let's say you want to trade over the medium term. Now, as you can see on the screen right now, I have included a weekly bar chart on the left of the screen, together with a weekly and monthly swing chart. Notice on the bar chart the stock has two bars clearly trading above the downtrend line, which would normally signal an opportunity to buy. If you look at the weekly swing chart on the very right of the image, you will notice that it is pointing up, which is also consistent with a good buying opportunity. But if you look at the monthly swing chart in the middle, you will see that it is pointing down, which indicates the larger price movement is down. In trading, you need to assume that the short-term trend will always conform to the longer-term trend. Therefore, given that the monthly swing chart is pointing down, you need to assume with high probability that the weekly swing chart will conform to the longer-term trend. So until the swing chart indicates otherwise, you would not enter a trade. Again, we are attempting to pick the safest time to enter, not just any time. Knowing buy and sell rules alone will never make you consistently profitable. Now back to the example. Eventually, when the stock is strong, both the weekly and monthly swing charts will conform. And when they do, you will be able to enter the stock knowing with high probability that it will continue to move up over the medium term. When they do conform with each other, you will find that you make more consistent profits. In this example, the price at which both monthly and weekly charts should conform is $2.88, which is indicated by the horizontal line on the bar chart. This is the point that will result in the monthly swing chart turning up. Let me share you with a number of rules I recommend you include in your trading plan when using swing trading strategies. When trading short term, over several days, both the daily and weekly swing charts should both be pointing in the direction of the trade that you want to take. So if you trade forex, options, warrants, or contracts for difference, then unless you are totally proficient in cycles theory and time analysis, I recommend you rigidly stick to this rule, as it will help you avoid many losses and keep your money safer. If you trade over the medium to longer term, then both the weekly and monthly swing charts must be pointing in the direction you want to trade. Break these rules and it will greatly increase your risk, increase your losses, and decrease your profits. For many, sticking to the rules will be hard, as you may find a stock moves in the direction you want, but the swing chart keeps you out of the trade, and this may result in you entering at a higher price. While at times this may be the case, let me say that you need to have faith in the rules, because I promise you that it will save you from entering losing trades and increase your overall trading returns. Now, let's look at other ways that swing charts can support you in your trading. Swing charts only represent price movement of a stock. They filter out the noise that is commonly associated with bar charts. Therefore, swing charts just make it easy to see things like peaks or troughs, support and resistance levels, chart patterns, and in determining the strength of a stock. On the weekly swing chart on your screen right now, I've shown 6 years of price history. Now, I could have easily included 10 years on the chart and it would still be very easy to read. I've marked some horizontal lines on the chart indicating both the support and resistance levels, as well as marking where the stock retraced 50% of the last up range. The uptrend started from the low in March 2014, after which the stock confirmed successively higher swing lows and highs. Now, this indicated that it was now in an uptrend. In October 2014, the stock turned down in price to test support before turning back up. Given that the stock retraced less than 50% of the last upswing in price, it confirmed the stock was strong. From there, the stock moved up in price to break up through the downtrend line to confirm a nice, safe buying signal. In fact, this is one of the lowest risk trades you can take. Given that the stock had closed twice above a downtrend line, both the monthly and weekly swing charts were pointing up. The stock had also confirmed a higher swing low and high on a weekly swing chart, and it had retraced less than 50% of the last range. It seriously does not get much better than that. So here's a tip for new traders. Every single swing high and swing low on a swing chart can be used to apply a trend line. Therefore, if you're ever in doubt about whether you can draw a valid trend line on a bar chart, simply look at the swing chart to see if there are 3 swing highs or lows that you can connect. Now, to increase your knowledge in using swing charts, I recommend you look at several stocks and notice how various patterns unfold, including things like head and shoulders, flags, pennants, double tops, double bottoms, and how easy they are to spot. I also recommend you apply various tools to your swing charts like trend lines, price extensions and retracements, as well as other popular tools just to see what happens. Now, if you're like me, you'll be amazed at how easy it is to analyze a stock using this type of chart. You'll also be amazed at how much your trading improves. So let's get into this week's stocks. Okay guys, and this is on the chart at the moment. We've got 3 charts actually of the Dow Jones Index. I've got the one we normally have a look at. I've got a couple of others just to show you quickly as well, but hasn't the market been exciting? Into January, moving up quite nicely, and things have sort of settled down a little bit. Expect more volumes to come through the market now. They all started last week. Generally sort of mid-December, mid-January, volumes are down on all markets around the world because obviously Christmas time, people are not thinking as much about buying, and different people around the world are on holidays, those sorts of things. But at this point in time, I think the market will start to settle into a nice rhythm, and will probably the volatility of the last sort of 12 months will subside a little bit, and things will get going there. So let me just put my glasses on and have a look. On the left of your screen, we've got the normal chart that we're actually looking at. This one I've shown you once before. It's actually the Dow and the S&P 500, just showing you the green line is the S&P 500. The black line is the Dow, and you can see here how they sort of get out of sync a little bit, but they generally go together. Now the S&P 500, you're looking at the technology stock makes up about 25% of the S&P 500, whereas technology is not a big part of the Dow. So if you've got the FANG stocks doing really, really well, that will probably be the difference to some degree in here. And obviously the Dow is 30 stocks. S&P 500 is 500 stocks, so it's a little bit different. But right now they're both sort of going together, but they do get out of sync at different times. But I always like to have a look at things in different markets and everything else. I'm just showing another little thing that I use, which is I just use a lot of Gann work, and some of you may be familiar with that and some of you may not be. But you can see here I was expecting it to come down to this sort of $22,000 level, and you can see some of my work and my analysis there. Really important stuff that I actually do, but it's in some of my more advanced courses that I actually do that theory, using a lot of those advanced Gann theories. But they're really, if you're going to be more of an aggressive trader, more of a short-term trader, more of a leverage trader, then you need some of those theories. If you're looking at more medium, longer term, more not buy and hold but active investing, you really don't need a whole lot of theory, and that's where my Trading Mentor course absolutely slam dunk perfect for you. If you're looking at more medium to longer term, getting into the market, that sort of looking for simple strategies and a nice trading plan that I was talking about earlier, you get a trading plan in it. So it's a perfect course for you to get you started. Looking at the Dow Jones, as I was talking about last week, it has been bullish the last couple of weeks since that end of December. We've had 3 weeks up. So looking at there is that week ending the 28th of December. The Dow had a low of 21,712, and it's just been bullish. Nice bullish, and last week's bar closing at 24,706. Beautiful, beautiful week. Again, I still think there's probably it's moved up really, really, really strongly now. It's probably a bit too strong for my liking. I would have liked to have seen it go a little bit slower, and this is where, sometimes markets will move. When they move too fast, they'll come back to a more normal pace, and so we see 1 or 2 weeks down. And if we look at looking at one of my tools here, and I'll whack it on here to here, you can see here how the Dow's moved back more than half of the range it fell, and it's nearly up to 61.8% of the distance it fell. So it's really, really fast at this point in time. So you might see it start to trade sideways a little bit, maybe not as bullish this week. If it's really bullish again this coming week and it moves through that 24,950, I would suggest we're not too far away from seeing 1 or 2 weeks down. So it does. Some people just get in and get that euphoric buy-in to try and stagger profit, that sort of stuff. But at this point in time, I think it's a little bit too fast. But it's still a good sign. It's still a great sign to say that the Dow may even move through in the not too distant future through to its all-time high back in October, which is 26,951. I don't see we're going to see a big crash on the Dow, which is what the big news was last year. This week for the stocks that I wanted to cover, and if you do want me to look at stocks for you, then you do need to tell me the stocks that you want for me to have a good look at. That's not one of them. That's an Australian stock. Looking at the stocks for you, so you need to do comment below. So what I need you to do is actually put your little details down below and say, hey Dale, can you have a look at this stock for me? If you've got any questions, please do that too. I'd love to chat with you and really talk to you about some of those stocks that you are looking at. Today's stocks are, all I did was just got onto Google Chrome and I just said top stocks for 2019, and I found a Forbes report, came out on the 1st of January, had 19 stocks for 2019. Isn't that a nice title? 19 for 19. So that's what it did. So I've just picked 4 or 5 of those stocks, and I just randomly picked them. I actually didn't really spend any time on them. On your screen, Kraft Heinz, looking at this stock. Oops, sorry, I've got to download some data on this because it didn't pick up all the data. That's my fault, guys. But looking at it while it's building the data, which won't take it, only takes a few seconds. All big high back in February 2016, 88.89, now down around $40. So it's really fallen half in price. So if I stick on this little tool, you can see here that there's half of its all-time high price. 48.85 is half of its all-time high. Stocks that trade below half of their all-time high have got a higher probability of trading to this sort of level down here. So 61.8, even up to 75% of its all-time high. That's in sort of no man's land at the moment. So just looking at that, it's suggesting to me that it's probably having a bit of a move up now before it falls down to $37 into that sort of realm, and it may even fall further than that. Right now, not something that I would be recommending anybody get into. It a little bit early. Having a quick look at the weekly chart, you can see it's beautiful downtrend on that, and if we whack a trend line on it, you'll see what I mean. But if you just whack a trend line down through here, until it got through that consistently, a nice move through that and had a higher trough, I still wouldn't be looking at Kraft Heinz. I'm not saying the recommendation in the report is incorrect. I'm not saying that at all, because it may be a good buy in 2 or 3 months. Right now, my thinking is this stock is going down. It's proven it's going down. It hasn't proven it's going up yet, and that's the point. And trade on confirmation, not speculation. Right now, it is speculation that it is going up. Next stock is Disney. Now, Disney's one I wrote about for US World News and Media, an article I did probably about October or November, I think it was, because I actually did like Disney at that particular time. Considering what it's doing, it's going to be a bit of competition to Netflix in that sort of streaming television services, that subscription-based services. And there are a few other things. I think it's won some stuff over Fox, that sort of other different fundamental criteria that hopefully will add to its bottom line. Now, you can see with Disney over the last sort of couple of years, its all-time high is back in August 2015. Interestingly, its highs back then were the Dow's highs October last year. So, and it's just been going sideways since then. So what that's telling me is the market doesn't want Disney to go down. It's just going sideways. So to me, this is a really interesting stock in terms of looking at that sort of level here. If I put another trend line on it, you can see it's just doing a simple sort of a pennant pattern, which is more, it's a slight distribution pattern. But once it breaks out the top of this pattern here, this thing will take off. So I'm quite excited about Disney as a stock for not just for the next 6 months or for this year, probably for the next 2, 3, 4 years. I think Disney will be a very, very good looking stock. So that one I actually really do agree with Forbes in that respect of being a good stock. Another one they picked was Mollison Coors Brewing, or the stock ticker code T for Tom, A for Apple, P for Peter. And again, another bearish stock that had been falling since October 2016, as you can see there on that chart here. So looking at that, it's quite an interesting stock. It has some sort of ranging in there. It's been in a downtrend down into last month. Had a low of 54.17. And using my tool that I put on before onto to Kraft Heinz, you can see that that's also broken through that 50% of its all-time high, because all-time high is $112.19. $56.09 is half of that price, so it's broken but below that. Interestingly though, if I expand that up, it hasn't really opened or closed below it. You can see this bar in December closed right on it. If you're looking at the close for December, 56.16, where that 50% level was 56.09, so it closed above it. This month it opened at 55.88, so it opened just below. It'd be interesting to see if it doesn't hold up here, starts to fall away, then it's heading south down to that $42 area. So just be careful of this one right now. You can put a nice little monthly trend line on this stock. As long as it keeps trading below this line, then there's no way known I'd be looking at putting my money into it. Again, not saying that Forbes hasn't got it right, because it could very well be beautiful stock from here on, but I'd need to prove some stuff for me before I got into it. Next stock here is B&G Foods that we've got here. So this is the last one I'm going to cover for today. Again, another stock that's been going down to May last year, down to $22 from a high of $52. Massive move down, and quite at this point in time putting my trend line on it, just putting some really simple basic analysis on it. Again, whilst it's trading below that big green line, that trend line there, I'd be staying out of this stock. Importantly, it's made a high trough here in October, 24.86, so that was its high trough, but it's not really breaking through. And if you look at this last bar, or January's bar, if you look really closely at it, and December's bar, December it opened here at $30.30, traded up to $31.60, closed back down low at $28.91. Not a great sign, showing indecision. Then this month so far it's opened at $28.72. Tried again to push up, went up to $30.85, a bit lower than last month. Came down so far, closing at $28.51. If this closes low this month in the last sort of 8 days, 7-8 days of January here, if it still stays down low, then my suggestion would be it'll be trading down next month and will continue down, most likely to break below that low of $24.86, and then probably if it does that, it will go down below that low there on that May 2018 low of $22. Because remember, it's dropped fair whack of move here, hasn't it? So if I put my that little tool on again and just measure it, it's fallen through that 50% level, and you can see there that $26.42, because it was $52.84. $26.42 is half of that distance, so it's highly likely it could go down to that $20.85. And remember, for looking at my Dow reports over the last few weeks, I suggested the Dow still could have some more downside onto it, although I'm starting to think it's more bullish at the moment. But the downside's not a lot, and we could see some of these stocks bring the Dow back down again. But not sure on the Dow. I said the pendulum is more swinging to being going up. Right now, not convinced on this stock and a couple of those others. But good to have a look at what other people are recommending and then put your own spin on it. And this is where I don't trust the experts. And this is one of those things that I say to people all the time. People put out reports all the time. I do it. I put it out. I get media asking me all the time about stocks, and I write about stocks in terms of what I think they're going to do. But I always find the best way to teach people is don't listen to experts, do your own work. Make sure you know what you're buying, you know what you're selling, how you're managing your portfolio, and you'll make far more money. So that's it for me this week. Remember, hit like on this video right now while you're talking about it. If you want me to look at a stock, you need to write it below in the box down below. Say, hi Dale, how you going? Can you have a look at this? Tell me what you want to do with it. If you own it, you don't own it, what you think of it, and so I can get a bit of an idea, and then we can chat from that point of view anyway. But in this week, have good luck and good trading. Take care, guys.
What are your thoughts? If you've got any questions, please comment below. Go and listen to our Talking Wealth podcast. They're available on SoundCloud and on our website. Now, they're jam-packed with valuable information which will help you elevate your trading. Now, if you're serious about learning to trade the share market and you'd like more information about our courses, please click the link in the video description below. Thank you very much for watching this video. If you've liked the video, remember to subscribe to keep up to date. I'm Dale Gillham, the Chief Analyst here at Wealth Within. Goodbye, good luck, and good trading.